Welcome to this presentation of investment banking news for February 13th, 2013 through February 20th. Presenting will be Benjamin Rasmussen, Stephen Gould, Spencer Montgomery, Summer Jones, and Erik Mikkelsen.
Last week, three major market-moving economic reports were released. Wednesday, the retail sales report was announced. It had fallen by 0.1% as projected by analysts. Thursday, the jobless claims were announced to have fallen by 27,000, and Friday, industrial production was announced to have fallen by 0.1%. Coming up this week, there are several market-moving reports to watch for, including the consumer and producer price indices, existing home sales, and the Philadelphia Fed survey. Additionally, the sequestration deadline is approaching on March 1st. If agreements are not made, automatic budget cuts of $85 million will occur, affecting most federal government programs and agencies. In regulatory news, the FBI has opened an investigation of suspicious call options placed just ahead of the $23 billion acquisition of Heinz. The trades were linked to a Swiss bank account, which was frozen by the SEC last Wednesday. The 2,533 call options purchased marked a noticeable increase in Heinz option activity, which had been quiet for months before the trade. Insiders in the company are the prime suspects. SAC Capital Advisors founder Steve Cohen is trying to persuade regulators not to file a suit that would potentially shut down his firm. The SEC has subpoenaed a 2011 deposition for a suit they intend to file. Cohen is accused of securities fraud, insider trading, and control person liability for failing to supervise his employees regarding insider trading. The suit has not yet been filed. Thursday, Massachusetts Senator Elizabeth Warren made a big impression during her first Senate Banking Committee meeting. She criticized regulators for pushing to settle cases against big banks instead of pushing for convictions of executives involved in the financial crisis. She showed her plans to be a thorn in the side of the big financial institutions in her remarks as follow.
U.S. attorneys who are out there every day squeezing ordinary citizens on sometimes very thin grounds and taking them to trial in order to make an example, as they put it. I'm really concerned that too big to fail has become too big for trial. That just seems wrong to me.
Lately, we've been seeing more merger and acquisition activities. This past week was no exception, as a couple of deals went through and talk of many more has started. This surge of M&A is due to many factors. Some of these are skeptical companies have been sitting on a large amount of cash and are now looking to invest. With interest rates being as low as they are, companies do not want to hold this cash, and low interest rates are providing additional debt financing. Another factor is that the U.S. economy appears to perhaps be recovering and the European debt crisis appears to be easing. Finally, as the economy may be improving, we are seeing the stock market rise. This positive growth is encouraging people to get in. The big M&A activity of this week was the merger between U.S. Airways and American Airlines. On Wednesday, February 13th, U.S. Airways and American Airlines merged to become the largest airline, matching up with Delta and United Airlines. This merger is predicted to create over $1 billion from savings and new revenues. Doug Parker, who will preside over this new airline, says of the merger, "One of the really nice things is how complementary the route networks are. Of over 900 routes, only 12 have any overlap, which is phenomenal. We are going to need to keep all of the hubs in place. The cities we fly to will continue to fly to." Transaction costs are expected to be around $1.2 billion spread out over the next 3 years. This merger makes American Airlines the world's biggest airline. Other M&A talk that has been going around includes Office Max and Office Depot have been privately meeting discussing a possible merger in order to be more competitive with the industry leader, Staples. There haven't been any official announcement, but plans have been in the making for over a year. Also, Comcast agreed to buy the remainder of NBC Universal from General Electric. Anheuser-Busch, the largest brewery in the world, had plans to purchase Grupo Modelo, but were stopped by the U.S. authorities as this deal would hurt competition. Today, Anheuser sold full control of Corona distribution to the U.S. Constellation Brands to appease the authorities. Cardinal Health, advised by the Bank of America, Watcha Lipton, Rosen, and Katz, acquired AssuraMed to add home delivery services of healthcare products.
This week in firm and industry news, we are seeing a large amount of cutbacks being announced. Although the mergers and acquisitions market is booming, banks are still struggling to create value for shareholders and stock prices are falling. The largest cutback comes at Citibank, where they have started a process to cut 11,000 jobs. Barclays has also announced that they will cut 3,700 jobs. This has a lot of former Lehmanites turned Barclays employees feeling that they have gotten back on the roller coaster they were riding when Lehman was crashing in 2008. JP Morgan has also announced that they have cut traders and managers due to lower than projected revenues. Other banks such as Dutch bank ING will cut 2,400 jobs, while French Société Générale will restructure after posting net losses in revenue of $640 million. In other firm news, word had gotten out that Goldman Sachs CEO Lloyd C. Blankenfield was considering retirement. Some people even speculated that he was growing a beard because he was on his way out. However, he has dismissed any such talk this week, stating that the combination of this being who I am and what I do, and having absolutely no other interests, makes me think this is what I'll be doing for a while. Morgan Stanley is getting closer to a new CFO. They have narrowed the field to 4 internal candidates and are in final considerations. Recent CFOs at Morgan Stanley have been investment bankers, but they are strongly considering other directions. As for the industry as a whole, many executives made positive comments this week at the Credit Suisse Financial Services Forum in Miami. Specifically, Goldman Sachs CFO Harvey M. Schwartz stated that he expected the average return on equity in the banking industry would rise above 12% as firms scale back certain businesses. He went on to state, "I think that the industry will migrate to higher returns because it will have to. It might be a question of excess capacity coming out over a long period of time. Although stock prices are down, firms have a positive outlook and they predict to see an upturn in the near future."
For news in debt and equity, we have a debt offering from Louisiana of $250 million with Citi as the bookrunner. A debt offering has also been offered from Illinois totaling $500 million, and a preliminary debt offering has been offered from the Colony City in Texas with Piper Jaffray and Company as the bookrunner. On the equity side, an IPO of 6.3 billion shares was offered by the online wire transfer guru Zoom. In mergers and acquisitions, Berkshire Hathaway has uncharacteristically taken on leverage to finance the M&A deal with Heinz. Funding from Brazil's 3G Capital will be around $4 billion for common shares, while Berkshire Hathaway's offers of $12 billion for common and preferred shares stands. The deal totaling $23 billion will be completed with Heinz taking on $7 billion in leverage, bringing Heinz' total debt to $13 billion. Other M&A news includes the controversial merger between the U.S. Airways and American Airlines, with U.S. Airways shareholders receiving 28% of combined equity. Lastly, Comcast and NBC's deal has totaled $16.7 billion, with Comcast purchasing a 51% stake in NBC for $13.8 billion.
As in the regulations section, hedge fund SAC is under further investigation for insider trading. Cohen's testimony, reviewed by Bloomberg News, establishes his personal control over the unit and records his unfamiliarity with the firm's compliance and ethics policies on insider trading. "I've read the compliance manual, but I don't remember exactly what it says," Cohen said. Also unhelpful was a statement that no employee had ever been punished for violating the firm's compliance policy. In a 6-year investigation of insider trading by Wall Street firms, federal prosecutors, or the SEC, have accused the former portfolio manager, Matthew Maritoma, and 6 other SAC employees on illegal tips while at SAC. Clients of SAC Capital Advisors moved to pull $1.7 billion from the hedge fund firm, or roughly a quarter of the outside investors' money, as an insider trading investigation weighed on confidence in the money manager. SAC will pay out about $660 million next month to investors who had requested withdrawals ahead of Thursday's deadline. SAC's managers managed roughly $6 billion in outside capital, according to people familiar with the operation. The scrutiny has tested clients' loyalty and pressed one of the world's top-performing hedge fund firms to adapt. Shortly before redemption requests were due, SAC offered clients more time to decide whether to pull their money. A representative of one investor said SAC can easily manage returning $660 million next month. with little or no noticeable impact on its operations. Still, the exodus was seen by some clients as remarkable for a single quarter considering SAC's extraordinary track record. SAC has posted an average annual returns of about 30%. In a very un-Buffett fashion, Berkshire Hathaway and 3G Capital used 6 times leverage to finance the purchase of Heinz. After this announcement, the stock price of Heinz jumped from around $60 per share up to $72.50 per share. The summary of global and foreign exchange markets starts with the Swiss National Bank reaffirming that it is going to keep its floor of 120 francs to the euro in order to boost its economy. Also, Jacob J. Lew has been nominated for the Treasury Secretary. He's been interviewed by the Senate Finance Committee and has told senators that his top priority is to boost the economic recovery and also grapple with the nation's growing debt.
And that's it for your investment banking news for February 13th, 2013 through February 20th.